Hey everyone, welcome back to the channel. I'm your host Ian, and today we're diving into Vancouver's 1981 bubble burst. If you're like me, you likely think that Vancouver's housing market really just seems like it's always been sky high. But back in the early 80s, it went through a wild ride that's worth taking note of, especially with the lessons it holds for today's market. First, let's set the scene in the late 1970s. Canada was coming out of a tough economic stretch with high inflation. Think double-digit percentages eating away at savings. People started viewing real estate as a hedge against that inflation. A way to protect their money by investing in something that was tangible, something they could see, touch, and feel that would also appreciate. In Vancouver, this mindset fueled a speculative frenzy. From 1977 to 1980, average detached home prices jumped from around $80,000 to nearly $180,000. That's more than doubling in just a few years. Speculators were flipping properties, and public sentiment was really optimistic. Many believed real estate would keep climbing forever, driven by population growth, urban expansion, and that inflation-proof appeal. It felt like a boom everyone wanted in on, with little fear of a downturn because, hey, land in a growing city like Vancouver seemed like a can't-lose bet. But by the early 1980s, things really started to shift around. Prices doubled again in some areas, from almost $90,000 average to $180,000 average a year later. Over speculation was really pushing people to borrow and borrow and borrow and build up all this debt, assuming this endless appreciation. Then you add in economic shifts. Canada was battling runaway inflation all over. The Bank of Canada started hiking up interest rates aggressively. By late 1981, mortgage rates hit over 20%, with some peaking at 22.5%. That squeezed buyers out fast. Suddenly, affordability just wasn't a thing, and the market stopped. Reports from the time noted that no one in Vancouver's real estate scene expected rates to drop, so prices were expected to crumble. During this bubble's peak, sentiment shifted from euphoria to unease. People who bought during the peak started to really worry. Would they recoup their investment? The Vancouver Real Estate Board downplayed talk of a crash as overblown at first, but reality really hit. The burst came swiftly in 1981 to 1982 amid a national recession. Vancouver's prices dropped sharply by 35 to 40% from the early 1980 highs to the late 1982 lows, with some homes losing up to 50% of their value. Inventory piled up as sales collapsed. From May 1980 to April 1981, sales were strong despite low stock, but by mid-1981, it really just flipped. They went from 1.5 months of inventory to 5.6 in a single month. The public mood turned sour. Homeowners felt trapped, especially those who'd stretched to buy at the top. Reports really captured their fears. Families wondering if they'd ever even break even, in a sense that the market had hit a wall where no one could ever afford a home ever again. Now, the real interesting question is, what made this Vancouver specific? Well, Canada as a whole faced the 1981 to 1982 recession and those killer interest rates. The national real estate market was really just more affordable. Vancouver's bubble was isolated, driven by local speculation and hype around growth as a Pacific gateway. Nationally, average home prices were a lot lower. In broader Canada, sentiments in the 1970s and 1980s mirrored Vancouver's early optimism. Real estate as an inflation hedge, with FOMO driving the booms, but without the same localized frenzy. Post-bubble, from 1982 to 1986, the market was stagnant. Prices trickled down or held steady, dropping another 17 to 18% in some periods through the 90s. People learned the hard way that real estate isn't always upwards. It got a bit of a swing to it. Fears of bubbles became more real, especially after seeing how quickly high rates could pop one. Yet the allure persisted. By the late 80s, Canada saw another national bubble, but Vancouver's 1981 scar reminded folks of the risk and reminded them to try to take it a little bit slower. So, what's the lesson from 1981? First, speculation and easy money can inflate bubbles fast, but economic shifts like rate hikes burst them just as quickly. Vancouver's isolation shows how local factors amplify national trends, and the sentiments of real estate, well, they swing wildly, from invincibility to pure panic. Does that sound familiar to today at all? With current debates on affordability and foreign investment, remembering 1981 reminds us markets have cycles, and assuming endless appreciation is always a major risk. Here's the final question. Do you think we're in a similar situation now? Are we in a bubble, or has the bubble already popped? Catch you on the next one.